What's a credit card? And how does it work? If you're new to the world of credit cards, you probably have some questions about how they work. There's a lot to take on when you start using credit cards, and a lack of knowledge can end up costing you money. We will guide you through all the credit card basics. You'll learn exactly how credit cards work, how to choose the best first credit card, and plenty of other information you'll need to know about using credit cards. What is a credit card? A credit card is a small plastic or metal card issued by a financial company. It allows you to make purchases by borrowing money up to an established limit. It allows you to access a credit limit that's provided by your credit card issuer. Your credit limit is the maximum amount you can borrow. A credit card can help you build credit, make convenient payments, and meet everyday expenses in your life. Instead of giving you the full loan in cash, the card issuer lets you take as much of the credit limit as you want at a given time. As you pay off what you've borrowed, you can borrow again. Let's dive in and learn more about credit cards, how they work, and how they are different from debit cards. How do credit cards work? A credit card is tied to a credit account with a bank, and when you use the card, you're borrowing money from the issuing bank. You can use a credit card to purchase goods or services with any merchant that accepts credit cards, or to take out a cash advance. Each credit card has a credit limit, which is the maximum amount you can owe the bank at one time. You can use your credit card until you've borrowed up to your credit limit. The amount you have left to borrow is also known as your available credit. After you make a payment, you have more available credit to borrow again. The amount you owe the bank today is called your balance. You can even use your credit card to earn rewards, build a strong credit history, and get access to better loans and credit cards in the future. To make a purchase at a retailer, you typically insert the credit card into a card reader so it can read the security chip on the card. You may also be asked to enter your billing zip code. At an online retailer, you'll be asked to enter the card number, expiration date, security code, which is typically found on the back of the card, and your name and billing address. When you swipe your credit card to make a purchase, the merchant's credit card terminal asks your credit card issuer whether the card is valid and has enough available credit. Your credit card issuer then sends back a message stating whether the transaction is approved or declined. If it's approved, you're good to go. If not, you may have hit your credit card limit, or your card may have been deactivated due to suspected fraudulent activity. This doesn't necessarily mean your identity has been stolen. Card issuers may deactivate your card and get in touch if you've made unusual purchases. If you travel abroad, your card issuer may deactivate your card until it confirms that you're the one who made the purchases. How does credit line works? Each time you make a purchase, your available credit goes down by that amount. For example, if you have a $300 credit limit and you make a $25 purchase, you'll have $275 in available credit. You'll owe $25 to the credit card company. If you borrow another $50 before paying back the $25 you borrowed, you would owe the bank a total of $75 and have $225 in available credit. What makes a credit card different from a regular loan is that your credit limit is available after paying down the balance. You can repeat the process of spending up to your credit limit and repaying the balance as often as you like, provided you abide by the terms of the credit card. You can continue borrowing against your credit limit over time, which is why credit cards are referred to as open-ended accounts. What is APR? APR, which stands for annual percentage rate, is the annual cost of borrowing money with a credit card. It's the interest rate you pay on charges that you don't pay off within the grace period. Fortunately, you can avoid interest charges by paying off your card's full statement balance. If you do that, you won't need to pay any interest on purchases you make. How to build credit? After you're approved for a credit card, it's important to use the card in a way that will improve your credit score. In order to build credit with a credit card, you should pay on time, keep your balances low, ask for a credit limit increase, and keep your account open. Credit cards versus debit cards? Since credit cards and debit cards look alike, it's easy to get them confused. Although both the debit and credit cards are tied to financial accounts, the accounts they are tied to are different. A credit card is tied to a revolving line of credit that a bank has issued you. A debit card is tied to your bank account. With a credit card transaction, the card issuer pays, and you pay them back later. With a debit card transaction, you pay using funds from your bank account. Credit cards affect your credit score, but debit cards do not. When you use your credit card and pay the bill on time, your credit will improve. Paying by debit card does not benefit your credit score in any way. Key takeaways from this video. A credit card is issued by a financial company and allows you to make purchases by borrowing money up to an established limit. To make a purchase in person, you must insert the card into a card reader. To make an online purchase, you must provide all your card information and your billing address. Once you pay down what you've borrowed, you can borrow again up to your credit limit. You can often avoid interest charges by paying your full balance by your due date. Though they look the same, debit cards function differently. They allow you to make purchases by electronically deducting money from your checking account. Hope you learned about credit card and understood its working. If this video was helpful, press the like and subscribe button. Thanks for watching.